Hello and welcome to Console Cowboys. So in this week's consulting video, we are going to talk about the different tax situations you're going to find yourself in as you go through your journey. And this was a requested video that I'm diving into a little bit early before the business stuff, but let's hop into it. Now, we're first going to talk about finding a qualified tax professional because this is not financial advice, nor is it accounting advice. You need to find a qualified tax professional, but not any qualified tax professional. You need to find one who has read more than the first page of the tax code. The first page of the tax code will tell you all the ways that you need to pay the government. The rest of the 100 pages of the tax code actually tell you all the ways you can avoid paying the government based on following what the government wants you to do and following the tax code, right? Because tax avoidance is legal, tax evasion is illegal, and that's something you need to understand by educating yourself and having a good tax professional that understands all of these things guide you through it. So once you have your tax professional, you can get started with more advanced things. But first, let's talk about the different tax situations. So first off, you might be a W-2 employee. What does that look like there? You might be a self-employed individual. What does that look like there? Maybe you've graduated from that into running your own entity. What does that look like there? And then you have become very, very successful and you're paying way too many taxes. What do you do? So first off, let's cover your W-2 employee. You're working for a corporation and they're giving you a paycheck. And as you already know, as soon as you get your paycheck, you see all the line items of the taxes they took out. You never had a chance to expense everything out. You never had a chance to do anything about your taxes because they've already been taken out. And your only path is to then at the end of the year claim expenses and recoup some of the losses that the government has taken from you. Now, with this, you can talk to your tax professional and get a list of all the expenses that you can write off, whether that be your home office or your internet or your travel. But it basically stops right there and you're very, very limited with your taxes because they're taken out before you get paid. And that is why lawyers and doctors pay the most taxes than anybody else compared to somebody like Jeff Bezos, who has his own entity and has all his expenses before he pays things. Now, as you move on through your journey, you're gonna start doing your 1099 pen testing jobs. And you're going to be a self-employed individual, maybe even while you have your W-2. Now, this person is going to get paid by their clients and there's going to be no taxes taken out. It's up to you to set those taxes aside. But you can now expense everything out before you take taxes on the whole. So you expense out maybe whatever it is, maybe 25% of all of the stuff that came in was expensed out. You're only going to pay taxes on that 75%. However, the one thing you got to understand about a self-employed individual is that they also have a self-employment tax, which is like 13, 14, 15%, somewhere in that range. And you're going to pay that for being self-employed. Now there's ways to avoid that. So once you get past that threshold of doing 1 or 2 gigs a year and you start making real money, maybe you're making $50,000 or $100,000 extra a year and it makes sense based on what your accountant tells you, you can start not being yourself anymore, but being an entity, right? What am I talking about? Well, LLC, S corporation, C corporation, or an LLC taxed as an S corporation, or an LLC taxed as a C corporation. All of these things are taxed differently based on how they're run and how they're set up. Now, you should talk to your accountant based on what they tell you. They can help guide you as to what entity would be best for you. However, I highly suggest that you start educating yourself. And one way to do that is to start reading books about these things. There is one by Garrett Sutton called Start Your Corporation, as well as he has one called Run Your Corporation. It'll talk about all the entity types, what they're good for, what the tax implications are, and then Run Your Corporation will talk to you about your day-to-day operations of your corporation and tell a bunch of stories of people who are running these different corporations, the situations they found themselves in, where one was more advantageous and one was more at a disadvantage. And these will really help you understand what your tax professional is telling you and whether maybe they don't even know what they're talking about and you need to graduate to a better tax professional. Now, I'll just give you one example, which is very, very common in our industry for, say, a penetration tester who's making a bunch of extra money or working full-time as a 1099 employee, and that would be an S corporation. Now, the way that an S corporation differs from a regular individual is that you get your money that comes in, much like a self-employed, and you expense everything out, much like a self-employed, and then you pay your taxes on what's left. But the difference is you no longer pay that 13 or 14 self-employment tax. What you pay taxes on is a reasonable salary that you give yourself. So if you're making $200,000 a year, you pick a reasonable salary for you and talk to your accountant about what that is. Maybe that's like $65,000 a year, $75,000 a year. It really depends, but you're only going to pay taxes on that reasonable salary. The rest of that, you take an owner draw. That owner draw gets all the expenses minused out of it, and whatever's left, you just pay your state and your federal taxes on. And when everything is said and done, you might go from, say, 50% taxes on your W-2 down to, say, 20, 25% taxes using your entity and taking your taxes out first and paying taxes on your salary. So it might save you a considerable amount of money, but you need to educate yourself and understand what these entities are, have your tax professional guide you, and give you a list of all the new things that you can expense out, because as you have different types of entities, you can expense things out differently and save a considerable amount of money depending what you're doing. Now, another thing to look at while you're in like this part of the world with taxes and this situation is something like tax-free wealth, which starts going through a bunch of things within the tax code, whether you're doing passive income or you're an active person in it, or whether you're doing real estate stuff or you're hiring your kids, etc. And it'll go through a lot of stuff within the tax code, which are advantageous for you. And you can learn about all these things and then talk to your tax professional and get a little more details on how to set those up. And then maybe you can save a considerable amount more of money per year based on what that is, because there is a lot of things within that tax code that you can learn about that'll help you avoid paying very, very, very high taxes. Change your facts, change your tax. Now let's talk about what happens when your facts change considerably. You've been running your business for a while and you're making an extreme amount of profit. I'm talking you're paying $200,000, $300,000, $400,000, $500,000 in taxes a year to the IRS, which could be better invested in your business, into your family, into charities, and you need a more advanced tax strategy or a better option. What are those? Well, there are a few. One is Puerto Rico, another is leaving the country, another is controlling assets rather than owning assets, and we could talk about all of these. So Puerto Rico is one. I've done Puerto Rico, and the first thing I'm going to tell you before you even consider this option is, do you love Puerto Rico and do you want to live there? Because if this is not the case, it's going to be a very frustrating place for you. If you love it, it might be a great option. It will get you down to 4% taxes. It will cut down your capital gains where you can buy a Bitcoin for $1 while you're there, sell it for $1 million, and you're not going to pay any taxes on it if you have the proper decrees. Now, in order to get these decrees, you need to talk to a lawyer. Pay a lawyer maybe $15,000. They'll set up your entity. They'll help you find banks and accountants, and then they'll put your decree into the government, which might take 6 months. It might take 18 months to get signed. Meanwhile, you live in Puerto Rico the majority of your time. You spend your time working there. You need to be working at places outside of Puerto Rico, not locally, right? So as a pen tester, you can totally do that and work with US entities. But what you need to understand are the US entities require things like insurances, and getting insurances in Puerto Rico can be rough because you're going through middlemen, and you have to find a place that will offer the insurance you need, like professional liability. And then once you do that, it might take you 2-3 months to actually get that. Meanwhile, you can't show proof to your vendors or the clients you're working with, and you might be stagnated on work or run into other issues. So you got to understand some of these frustrations in Puerto Rico. You might also be required to buy a house within 2 years if you are on the personal investor's decree for your Bitcoin investments or other things like that. And you got to pay donations every year. So, for example, $10,000 to certain charities. And there's a lot of other things you have to follow, maybe things such as getting voting and driver's licenses. You might have to pay people to help you with that because, it's a very complicated process over there and it's not just straightforward like it is in the US. So unless you really, really love Puerto Rico, I would not suggest that option, but it will get you down to 4% taxes. You are still a US citizen, so it solves that problem. Now, if you were to go a little more extreme, which I also wouldn't suggest unless you know exactly what you're doing, you can denounce citizenship and go to a place like Portugal. And I believe currently they don't pay taxes on your business for the first 5 years as long as you're a resident. But there's restrictions on how long you can be there, and you might have to go other places. And you have to get residencies and citizenship somewhere else. So that's a whole nother process. But you can save a lot, as well as crypto over there is just a business transaction like buying something, so you won't pay taxes on spending it. Those laws have been changing though, and they're all up in the air because they're based on local tax laws, so they can change at any time. Things to think about. So another option is instead of tax law, you can get into case law and controlling assets rather than, owning assets. So maybe you have your entity and you own 2% of it, and a business trust owns 98% of it, which now changes your tax situation. But you need specific financial advisors that understand how to do this and lawyers that understand the case law that can set stuff up correctly and advise you how to run it properly so you don't get in trouble. There's also books like Passing the Buck, which will help you understand how all of these things work and help you run things properly so that all of your taxes are handled. And this type of situation will get you down to 5% tax, 10% tax, those lower taxes that you see people like Bill Gates and, Jeff Bezos and all those guys paying. They don't pay a lot in taxes because they have things set up properly. So like when you see Bill Gates take 90% of what he owns or 90% of what he made that year and give it to a charitable trust, it's actually his charitable trust. And then he reallocates that money where he needs to go. He really didn't actually donate 90% of his money. He just has various trusts and they flow down through each other, and he can allocate this money in different ways. And then he doesn't pay a lot in taxes. So controlling assets versus owning assets, they change your taxes, but you need it set up properly. This can be expensive. This might cost you $100,000, $150,000 just to set up, but then it'll save you a considerable amount over the years. So you need to be in a specific place within your tax journey, and you need to understand whether you're working with case law or tax law, and you need to have the proper professionals that understand all of that to help you along. And one thing you got to understand, so with all the changing of tax laws, that's why you need that professional, because what you write off last year within your business might not be write-offable this year because it does change quite often. So you need that tax professional who's following those things who can advise you what you can write off this year versus last year, or those lawyers that understand that case law that can advise you how to run that particular thing. Now, I understand that this video was a lot, and for some people, taxes are a triggering word and they don't even want to understand it. They're scared of it. So I went over a whole bunch of stuff so you can understand where you are in your journey, and then you can start self-learning on that portion of where you are in your journey. Don't jump ahead. Understand where you are, understand where you want to go, and start educating yourself by reading, talking to tax professionals, and just diving in deep to what's relevant to you. And then you can really change your situation within your consultancy and maximize your profits as well as your savings there by following the tax code and doing what you're supposed to do. You can save more than avoiding the tax code. So hopefully this video was helpful to the person who requested it, as well as hopefully it is helpful to everybody else who is starting this journey and trying to understand and figure all these things out. Thank you, and I'll catch you next week.